Welcome to our Credit Myths video. I am Mackenzie at First Commonwealth Bank, where it is our mission to improve the financial lives of our neighbors and their businesses. Today, we are going to discuss credit myths. There is a lot of information out there about credit reports and credit scores. Although it is good to be able to research the answer to questions you might have, unfortunately, it can be hard to tell the difference between accurate information and misinformation. This sometimes leads to pervasive credit myths, and we would like to explore and expose some of those today. There is a quick fix to repair my credit. Just like there is no one magic pill that can guarantee a healthy body, there is no one quick action you can take to repair your credit. Your credit score is calculated based on the information on your credit report. The more often you make your loan and credit card payments on time, the better your score will be. The most important thing that will improve your score is having the ability to pay your loan and credit card payments on time and to pay down high balances on your loans and credit cards. Being consistent with one-time payments over time is a surefire way to improve your score, and obviously, that will take time. Any company or person that promises a quick fix to your credit in exchange for a fee will take your money and not fix your credit. The old adage is true. If it seems too good to be true, it probably is. Checking my own credit report or score will hurt my credit. Although it is true that how often you apply for new credit makes up 10% of your FICO credit score, you looking at your own report and score have no impact on your score. There is a difference between applying for credit, called a hard inquiry, and a general review of your credit report, called a soft inquiry. Examples of hard inquiries include applying for a credit card, applying for car loans or mortgages, and applying for any type of other personal loan. Soft inquiries include you reviewing your own report, or an insurance company, landlord, or prospective employer reviewing your report. Financial institutions that review your report to decide if they want to send you a pre-approved credit card offer is also a soft inquiry. Hard inquiries, which occur when you apply for credit, can impact your score. Soft inquiries have no impact on your score at all. It is important to periodically review your credit report to make sure there are no mistakes or fraudulent activity reported. You can access your report for free for each of the credit bureaus once every 12 months at www.annualcreditreport.com. It is important to review your credit report from each 3 of the credit reporting bureaus: Equifax, TransUnion, and Experian. Some information might be reported on one report that is not on the others. If you are married, your credit score and report will be shared with your partner. Your marriage status has no impact on your credit report or score. You have your own credit report, and it is linked to your Social Security number. However, if you have any joint loans, such as a mortgage, shared credit cards, or a car loan in both you and your partner's name, that joint loan will appear on both you and your partner's credit report, regardless of your marital status. On-time payments will benefit both of your credit scores, and late payments will harm both scores. Additionally, if you set up your partner as an authorized signer on a credit card you own, you will be responsible to make the payments related to their transactions. If the payments aren't made, it'll negatively impact your credit score. Students can get a credit card with no income. Prior to passing the Credit Card Accountability, Responsibility, and Disclosure Act in 2009, it was possible to approve students for credit cards even if they had no income. The Credit Card Act prohibits this, and these days, students can only be approved for credit cards if they have income or if they have a cosigner on the card with income. Closing a credit card will help your score. Closing a credit card you do not use will not automatically improve your score. In fact, it might lower your score. 30% of the FICO credit score depends on how much of your available credit you are using, a ration called credit utilization. When you close an unused credit card, you reduce your available credit. For example, let's say you have 2 credit cards, each with a $1,000 spending limit. You owe $500 on card A, and you don't use card B. As things stand now, your credit utilization is 25%, meaning you have a $2,000 credit limit on the 2 cards combined, and you are currently using $500 of that. If you close card B, it lowers your credit limit to $1,000, and even though you didn't take on any more debt, you are now using 50% of your available credit. However, if an open card is just too tempting for you to overspend, or if it has a high annual fee, it might be better for your overall financial picture to close it. The higher your income, the higher your credit score. How much money you earn has no direct effect on your credit score. Your score is based only on the information found in your credit report. Your report includes your history of the timeliness of paying your loans back, how much money you owe, how often you apply for credit, and publicly available financial information such as bankruptcies. It does not include any information about your income or even if you're employed or not. However, if you're not working and therefore not able to pay your debt on time, it will impact your score negatively. Lenders will also ask about your employment status and might require you to provide your pay stubs when you apply for a loan. There is only one type of credit score. There are many different types of credit scoring formulas in use in the credit marketplace. There are different companies that use different scoring models. Lenders check your credit score for different reasons, and each formula looks at your credit history in a different way, giving different weight to various factors. That means that the score you see on a website somewhere for free will be different than the score a bank sees if you go and apply for a loan. However, no matter what exact score you are looking at, the 2 most important factors that influence it will be a history of paying your bills on time and not using too much of your available credit. The best thing you can do for all your many different types of credit scores is to pay your bills on time and to pay down high balances on loans and credit cards. Using your debit card will influence your credit score. When you use your debit card, you are using the money that is in the checking account that is linked to the card. You are using your own money, and it is not a loan you have to pay back. Therefore, it has no impact on your credit score at all. On occasion, you might be asked to choose between debit and credit when you're checking out using your debit card. Even if you choose credit, you are still using your own money, and it does not influence your score. Disputing legitimate info on your credit report will help your score. You cannot remove accurate information from your credit report. Disputing a transaction as fraudulent when it is not only wrong, but it won't help your credit. The act of disputing a transaction, meaning that you are denying that you spent the money, does not influence your score. This is a common tactic of unscrupulous credit repair companies. They dispute legitimate transactions as fraudulent. You should only report something if it is a legitimate mistake or a genuine case of fraud reported on your report. You can file a legitimate dispute online with each of the 3 credit bureaus. Companies that provide credit scores make changes and updates to their credit scoring formulas all the time. New laws are passed and regulations change, so what is true about credit reports and scores today will not necessarily always be so. If you have any questions about your debt, talk with a trusted banker and mark on your calendar to remember to check your credit reports each year. Thank you so much for joining us today. To give us feedback on this video and to be entered to win a great prize, please take a quick survey by scanning the QR code or visiting the site listed on the screen.